Because green, when you see green, it stimulates like happiness. Have you ever, like, it stimulates creativity, it stimulates happiness. When you see red, it makes you very like, you know, when those matadors, when they have those red carpets at the bulls,
Yeah.
it stimulates aggression. In our brain, the color red stimulates us in a way too, and most of us are completely oblivious to it. And when we hear profit and loss, like those words, they trigger specific signals in our brain. So all of this is beautifully orchestrated to take money from you, man. So that's why to me, the reason I have it, just these colors, is so I could just focus on the structure. I don't really care about the colors, man. I just focus on the structure.
So in reality, the colors don't matter.
The colors really don't matter, whether it's green or red, because if you know you want to sell, then you don't need to look at a red candle to know what a red candle is. Like if I want to sell high, for example.
So I honestly thought it actually made a difference what color they were.
Yeah. So if you want to leave it at your default color, that's absolutely fine. You know, that's just a little pro tip that I would give to you guys, so you're aware of it. But I highly recommend just customizing your charts the way you want it. That way it makes you happy and it's aesthetically pleasing to you. But the standard defaults in your trading platform, they're meant to take money from you. I just want you to know that. It's a little pro tip. But all right, so we are going to be talking about the 3 types of structures or setups that we will commonly see. I guarantee you, man, like if you guys go back and look at your charts and study them, you will see in some way, shape, or form these variations. So this is going to be a downside continuation play. So what you'll notice is that you might have a nice little level. Like that. Price will put in a high, sell off. It'll breach that high, sell off. It'll even breach that high, close, pull back. And then it'll create this little tiny range. It'll consolidate. Once you get an invalidation of that prior high and the market sells off aggressively like that, what we call a break of structure, the market will have that impulsive move. It will consolidate and create this little range. Come back, stop hunt, pull back, and then break the low, come back to that low, create another stop hunt, and then come back for another extension down. I want you guys to draw something like this, very similar, memorize this shit, because you will see it time and time again. This is what we call a sell structure or a sell week. This is usually when the markets are pretty bearish. Sell week. Oh, fuck that. Let's just make that a K. I'm not going to type out that whole word. So sell structure or sell week. And then we will talk about what our long plays look like. A buy week or buy structures. And mind you, this can happen for 1 to 3 days, or it could even take a full week, like the market could continue to trend down. But generally, once you see this, you can play it throughout these types of levels and make money from it. So where you target is entirely up to you. You could target the low of the range. You could target another extension. Wait for that pullback, et cetera, et cetera. But the whole point is that memorize this fucking structure, draw it out, look at it every goddamn morning when you wake up and before you go to bed. And I guarantee you, this is just going to be second nature to you. So this is what we call a buy structure or buy week. When it's time to buy for that week, we're getting bullish week. So you will generally, when the markets sell off pretty aggressively, they will put in a low, and price will be at this stage of inefficiency, meaning that it's not taking out these prior lows. And then you get this nice little consolidative range. And then this is what you get. Boom, fake out. Close back, retest. London flush. Impulsive move to the upside. This is what we call our accumulation zone. You guys have seen us trade this, not often because it doesn't happen all the time, but it happens quite frequently on the euro, on other pairs. Price will be contained in a box. Price is hovering at the fucking lows. It's like it's not going anywhere. And then all of a sudden it breaks, but it catches traders on the wrong fucking side. It goes back inside the range. That means this is what we call a fake out, a false breakdown.
Yeah.
And this is what we call the accumulation zone, because this means is big institutions are accumulating positions around here. So this is an accumulation zone setup. So if you are able to identify this pretty early, dude, this setup alone, when I first started to day trade the euro, this is what made me a lot of money. And I would make money within, I would make like $200-300 within like 15 goddamn minutes. Because if you look at the 15-minute time frame, this is you will see this so often. And we'll pull up the euro and I'll show you this shit over and over again. You'll literally see it time and time again. It's so goddamn obvious. So this is the accumulation zone. This is the first part of this setup. So you can take your trade here and target the high of the range and hold a second target for that extension. And what you'll see is when it breaks the high of the range, it'll consolidate again, and it'll stop hunt. It'll look like a V-stop, creating another extension and impulsive move to the upside. Then another range will form, creates a new support level. Oh, you know what? Let me cut that out. Draw another line. It'll hover around that support level. Boom, another V-stop. You execute around there. Breaks the prior high again. Now, the thing about accumulation zones is I want you guys to understand something about our buy structure is that this is very tricky because sometimes you'll only get 2 extensions to the upside. If we're lucky, we'll get a 3rd extension. I don't know if you guys saw the trade I posted on the Euro Japanese yen, but dude, I played that trade so goddamn well, man. So goddamn well. And I'll post it after this meeting. I'll go ahead and post exactly what this looks like on the Euro yen. I can't make this stuff up, bro. Like, it looks almost exactly the way I'm drawing. You will see it on so many pairs, particularly the pound and the euro crosses. So once it breaks that prior high, oh shit. All right. Once it breaks that prior high, this is the problem with this. You have to be sure that at this point you're already flat. Like, once you've targeted this, you're already flat. And if you want to let your dick hang on this one and run it to another extension, just at that point, after the second stage of this move, it's a 50-50 trade because I don't know if it's going to create that 3rd extension. So if you do want to let another position run, be sure you immediately break even, because what I've noticed is that sometimes it'll do this. It'll sell off, take out that low, and then come back up. But most of the time what it does, if it doesn't create that 3rd extension, it'll literally hover around the level, put in a new high for the week. It'll look like a head and shoulders pattern or a blow off top, and then boom. Then we get our sell structure week. Buy structure, sell structure. And then if you're just playing a mark, so that is our second structure right there, or type of setups. And then you just look for these V-stops, so those deep-ass excursions. You look for those ranges. After the market has that impulsive move, it will exhaust itself. It will create a range. And then the last setup is, it's basically within the sell week, but I want you guys just to have a much more clear lookout of what it looks like. So it's a continuation play. Sellers are not given the opportunity to take profit at the lows. It'll come back, boom, double swipe, boom, close, pull back. So How do you play this? If you're aggressive by nature, you take it at the highs. If you're conservative, you wait for that pullback. Another variation of this is that after that pullback, if it still doesn't take out the low, what it will do is it will come back for that prior pullback, stop the traders out, and then it'll take out the low. And then it'll hover again, create another stop hunt, and then move again. So you have to extend your levels as price action emerges. Like literally memorize the structure. I guess we'll throw in one last one for kicks, but you'll rarely see it because the markets, you are in a trending state right now. But if the market is in a range, like a long-term range, I'm talking like in a daily or the weekly chart, it is just literally not fucking going anywhere. This is what we call our fade strength by weakness. When you get this massive range on higher time frames, this is where breakouts fail. So if you get price come out here and it creates a stop hunt, it goes back here, you can look to play that to the upside. You can take your target at the midpoint of the range and at the high of the range. But if this is on a higher time frame structure, mind you, this is what we call swing trades. You have to hold them for a lot longer. It'll come back to the range, breach the range, fail again. It will take out this low. The market is creating new ranges, bro. It is extending the range. It'll take out that low, come back again. It'll take out that high until it fucking finally breaks out. You know, I don't know, but this is another way to play these markets. Like when the markets are in a long-term macro range, they have no fundamental direction. Nobody's really trading it. This is what you will see happen. They're so easy to trade. It's just trading off support and resistance, and just waiting for those deep ass excursions and then mapping out your new zone when that new prior high or low is put in. Because what you'll notice is that if the market is still in a range, it will come back and take out that low, and it will come back and take out these highs. And at some point in time, the market will break out or it will break down at some point in time. But usually this is they stay like this for a very long time because there is no fundamental direction. Like investors and traders can't assess the value of that particular currency pair, and it can stay in a range for fucking years, believe it or not. So that's how you would play that. But that's pretty much it, man. These are what good high quality setups. Memorize these structures, write it down, and study your charts. And look at what you just drew on your notebook, and then look at the charts and try to compare variations. And just for kicks, we'll go ahead and pull up a buy structure a week. So let me go ahead and keep this on the chart. Euro, Japanese yen. So you guys see that I cannot make this shit up, bro. Pull up the 1 hour time frame.
And check out the NZD, Dave. Nice little nice little stop hunt he just did right now.
Let me see. Yeah, I'd be careful on taking any trades right now, though, just because we are still in the Asian session. Give me a second, guys. I mean, this technically still counts.
Yep.
Yeah, that counts. If anything, we might get it breach that high before we get it come back low. So it's possible. It's possible. Yeah, but I mean, I think you could still hold your trade just for a little bit longer, bro. You could definitely.
Yeah, I already exited. I exited off this right now.
It's reacting off the 65, 100 level, so that's a perfect place to take profit. But yeah, this is a minor stop hunt. It's not what we're looking for. We definitely want this range as we discussed earlier, because this is just such an accurate fucking range. Like it's obvious, it's accurate. We know if price does come back to that level, buyers are going to be very interested in wanting to transact around there. So that's what it should look like. But let's go ahead and pull up the Euro Japanese yen, and I'm going to show you guys that buy structure. Like, it's just insane how these structures play out.
So for these structures, are there a certain like time frame where you feel like they match up the best to this, or that we should like look towards? You feel or just it always just depends.
It always depends, but that's a really good question, Cindy. On most charts, they can be very difficult to identify. Like on higher time frames, you normally won't see them on higher time frames. Like sometimes you can see them on like. So we know that this is the buy structure that we're getting. Like we know that this is the buy structure, but it's hard to see it on the daily chart. Every candlestick, these are what we call candlesticks or price data points. All these candlesticks is representing a specific time compression of data. So since this is the daily chart, every candlestick right here represents 1 day of price data. So if we want to get a much more better read, this is the 4-hour time frame, the 1-hour time frame, the 30-minute, and the 15-minute. So let's go down to the 30-minute, meaning that every candlestick that prints represents 30 minutes of data on this time compression. And sometimes you'll be able to see our setups much more accurately on these lower time frames. So I'll go ahead and show you what our
lower time.
Yeah, just see it gets a little bit more messier because it's trying to compress a lot more data in one go. So I think we'll probably see it way better on the hourly, if I'm being honest. There we go. There we go. Hourly looks good. So
it looks like a printer running out of ink.
Yeah, basically. It's just the shit color that I chose. It looks a lot better with the green and red candles, but what do we got here, guys? Accumulation zone. Price is creating that inefficiency. Price is going nowhere, but we know buyers are taking that long. There's money down here, and then boom. Fake out, pull back, profit release, and then it breaks this level of structure. And then here we go. What do we talk about? You wait for those little ranges. This will probably look way better on the 15-minute. There you go. Your setup. Boom. Breaks that structure. Pulls back into the level. So you extend your range in the event that, you know, another setup presents itself. This is part of it as well. That's a stop hunt as well because it takes out that prior high. Another extension. And then this is what we would call a blow off top. This is what I was talking about. You see that? Well, it looks like a head and shoulders pattern. It just can't go anywhere, and then it will sell off. At this point, the price action is really choppy. I don't know what the fuck it's doing or what it wants to do, but that's the beautiful thing is like if you don't understand if our setup isn't there, then we don't take it. Like we didn't even see our sell structure setups because normally on our sell structures, this is what I would have wanted to see. I would have wanted to see a breach like that to confirm that we are in a downtrend. I don't know if we're still in an uptrend or a downtrend. I don't know if it'll come back up here and then sell off or if it'll come back here and buy up. The whole point is if you don't understand something at this point, don't fucking trade it. But I traded this so fucking well